on Friday, 2% up on Friday, but still oil prices had their seventh week of declines with the close on Friday, 7 weeks in a row. First time since 2018 we've seen such a consistent downward draft on the oil markets. Will it continue? That is the question. Let's welcome this morning our three guests. We'll kick off with Mark Ostwald, Chief Economist and Global Strategist, ADM Investor Services International. There's a lot to think about, Mark, as we approach the end of the year. The sort of biggest echo in the rearview mirror might be OPEC Plus decisions, but what's your thoughts on this continuous downward draft on oil prices and anything on the horizon that may reverse it?
Well, I think there's two things. First of all, I think the persistency of it relates to a combination of there's so much production which is shuttered at the moment that if oil prices were to rise, everyone goes, well, there's so much there that they can always start supplying more. And then there's obviously the huge increase in production in Brazil, in US, even in Guyana, the prospect of additional supply from Venezuela. And no one can really see any upside when everyone's talking the US is going to slip into recession next year. That said, I'm very skeptical about that particular part because the world has been, well, the financial world has been talking about a US recession now for 15 months, and they've been completely and utterly wrong. US probably will slow down markedly versus Q3, but that's, Q3 was a total outlier. And they're worried about Chinese demand because, amidst all the concerns about China this year, Chinese oil demand has been extraordinarily robust. But the sort of oil demand growth that we've seen this year can't persist into next year. And secondly, the economy is clearly not firing on all cylinders, as was all too evident in the statements that we had from the Politburo on Friday, basically saying we need to do more, which is more effective in terms of fiscal policy. So, yeah, I think it's an array of things which basically are not positive.
Peter McGuire, CEO of XM Australia. We had to drag him in off the beach for 5 minutes, given the 40-degree weather or whatever they seem to be having. They're getting their global warming down there in Oz. But Peter, your thoughts as we come to the end of the year here and inevitably going into some disruptive trading, lighter volumes as usual as people take off for the festive period. Anything on your crystal ball that sees a reverse, that could reverse this 7-week trend down on the oil markets?
Well, good afternoon, Sean, and greetings from Sydney to the other panelists, and welcome. I think this week, where we're looking, you've got to get through this week as far as data drops, Sean, and then that 60-hour window, we've got 60% of the globe's economy making rate policy decisions. So, and the rhetoric coming out of there, the likes of ECB, the Fed, and of course, Bank of England, BOJ, what's happening there. So the overall theme of building on what Mark mentioned, structural weakness, oversupply. Is it going to bounce? Yeah, it may. I think it's probably been oversold in a lot of ways. That US dollar's back at that nearly 104 level, the US dollar index, and currencies have been very, very choppy. So maybe it's a time that you might see a couple of bucks put on there. I was talking before the show started with Brian, and we were saying that gold this time last week was 21.44, and right now it's 2014. So it's down $130 in a week. The markets are incredibly volatile, Sean. And if I look at the Chinese market, that CSI 300 started the year 4,200. Right now it's at 3,400. So it's down 23%. So really it's a bear market territory. So where do we see growth, and where do we see the first quarter running? Going to be a very interesting first quarter.
Brian Pieri, founding member of Energy Rogue. Brian, I said in my intro comments, obviously OPEC Plus made a big decision last week, or the week before, and little wind in the sails from that yet. Could we have the delayed reaction once we see the whites of the eyes of that cut, that it is intended, it is followed through? Your thoughts on that OPEC Plus decision giving wind back to this market?
That's actually a great question, and I think you're right on target that the market priced in a couple of things when it sold off, because what was ironic is that they added to the cut or the voluntary cuts that were already in place, and then they added to it, and then the market retreated some more. And that is either a believability or that's not enough. And as Mark mentioned and Peter mentioned, that there is a lot of economic headwinds that we're looking at. I'm very curious on Mark's comment on we have been waiting for a recession for 15 months. It seemed to be every time that crude oil was weak over the last 15 months, well, we're looking at a recession. But if you look at all the demand numbers, I mean, if you look at worldwide demand, we're up over 2.5 million barrels from 2022 to 2023. So if we don't have an economic recession that hits the world, we have the potential to add demand. And then you look at the supply complex and the OPEC plus. Yes, there is some idle supply that could be brought on relatively quickly, but the U.S. is about to start hitting declines because most of the wells in the United States decline at a very rapid rate. Every month in the United States, we decline over 600,000 barrels a day. That means we have to add over 600,000 barrels a day of new production. And we've just over the last 6 months been dropping rigs because since COVID, we have added worldwide over 400, I think 450 rigs. 300 of those rigs have been in the US and Canada. And now those rigs are starting to come off. So I think the supply engine in the United States is about to start slowing down, and the supply engine in Canada. And if that hits at the same time that demand keeps continuing, yeah, we're going to have a very interesting 2024.
Mark, you didn't mention OPEC Plus in your opening comments. This is a second chance to do so. Obviously, this was a decision that was a difficult labor, let's just say. What is your reading of the tea leaves, and particularly in relation to Russia? Russia and its accountability seems to be one of the Achilles heels. Your thoughts?
Yes, I mean, you've got two issues. One they dealt with, which was, Africa hasn't really been part of many of the prior cuts in output, and two, Russia keeps on talking a good story about cutting production, but in reality, it's always tomorrow, not today. And there is a good deal of skepticism around that, and that is also part of the excess supply story. Though I completely agree with both Brian and Peter. I think this focus on the demand side is probably a little bit myopic, because the demand picture is outside of Europe not that dire. I think OPEC Plus, to a certain extent, are getting very frustrated because they can see the underlying demand is actually growing. I mean, when you look at, Chinese demand this year has grown by something like 10%. That's enormous for an economy that everyone is talking about misfiring.
But ultimately, that was from a COVID dead standstill, so to speak.
True. But that's probably one of the areas when one thinks about it in terms of COVID, the demand is always, unlike, say, metals or something else, things which can be delivered quickly. Oil, when you do the deal, it's 6 to 8 weeks before it gets delivered. You're not really looking at what the COVID rules are. That's the truth of the matter. So, it wasn't actually that weak last year. So from my perspective, I can see OPEC Plus's frustration, but they have to look at the overall picture. And for the time being, that's what they're doing. But I do agree with Brian. I think people's focus on the US supply is not acknowledging what the supply potential is going forward.
Peter, the question as it's percolated through the few comments this morning, as it always does, China. The we saw even through this somewhat unimpressive rebound from COVID, China still imported a lot of oil through the year, some record months, and yet built also a lot of storage with that oil. And I'm just wondering your outlook going forward. At these prices, the Chinese tend to like to buy, even if the consumption point isn't there. But in terms of just the discount, we're seeing the US also on the margins, nothing to scream about, but ultimately starting to refill their strategic petroleum reserves. Is this a window where China could keep buying because the price is right rather than demand is right?
Well, Sean, if you're looking back over the last 2 decades, that's certainly been their style and their strategy. Buy when prices are low, and they've done that with base metals so successfully. And don't take your eye off the ball as far as what they've done this year with iron ore. It's dramatic numbers what they've imported. So yes, it probably I won't be surprised to see them really, kick the tin a little bit here and fill up as much as they possibly can, because internally the demand is very, very strong, and that's been demonstrated by their purchases. Exports are well down in the sense of finished goods because from weak demand, but that's just the story going across the globe as far as Chinese finished products. But the internal demand is strong. As far as the stock market's concerned, well, maybe it was overpriced, Sean, and they've stripped 20% out of it. But it seems to be very much, and this time of year leading into Lunar New Year is really when they start to rattle the cage a little bit as far as purchasing.
Brian, I wanted to get your thoughts on who's the choreographer, who's the conductor that won the 2023? Is it OPEC Plus or is it Joe Biden? Although the Democrats and Joe Biden being the current president, the Democrats in general don't seem to get a lot of credit from the hydrocarbons industry, and yet during their watch, lots of positive things happened. The first shale revolution doubled the production of U.S. oil under Obama. Obama lifted the ban on exporting crude from the U.S. Now Biden, we've seen a record production recovery in the U.S. We're seeing the Iranians being basically blind eye turned with the occasional bark, but ultimately the Iranians can export what they like. Venezuela is now being rehabilitated. The shale is on fire, i.e. lots of oil supply. Yeah, we have a Russian oil price, but ultimately the Russians can export as much as they can or want, or the Saudis will let them. My point ultimately here is, should the Biden administration, or as is the case whenever you're president, you get the credit, that the U.S. has done an amazing job here, countering the OPEC Plus chess game and keeping price on a downward trend with all this extra supply. Your thoughts on that theory, and if so, if that theory holds water with you, can it continue?
Well, I'm going to give my personal opinion. My personal opinion is, when you look at the U.S. administration from a policy perspective, they don't have as much influence or control as OPEC and OPEC Plus, because ultimately it depends on the aggregate economic returns that producers have in the United States. So there can be policies that help facilitate that, but typically those policies are longer dated on an impact, and they're not going to make an impact within 24 months. So that's half a presidency. So that's
although turning your blind eye to Iran is immediate, because that's in your purview as president. Lifting sanctions on Venezuela is also in your purview as president. And they are, I mean, at least from the Iran point of view, fairly immediate impacts.
Sure, absolutely. The Iranian oil has actually increased, I think, over 2.5 million barrels over the last 16 months. So the fact of the matter is that the Iran excess supply, there's probably maybe about 600,000 barrels, maybe 800,000 barrels of idle supply, but most of it's already in the market. And this gets back to what Mark and Peter were talking about, is that, do we have the supply already baked in? And from the administration perspective, I mean, OPEC and OPEC Plus, is typically looking on a longer cycle than any administration in the United States. And because of that, they're positioning not for the next year. They are positioning for the next year, but they're really playing a much longer game than any policy decision in the United States. And softening on Iran, we are entering an election year. So 2024 is going to be a very intriguing year because I think we're going to have declining production in the United States. I don't think Venezuela is going to have any near-term impact. I don't see that really making an impact over the next 24 months. I could be wrong, but that's based upon what I have experienced as far as how much it would take to stimulate some of those fields. So I'm not sure if I answered your question, but no, hopefully I did.
Well, you kind of poo-pooed it, as would be my sort of my response in a very polite way, nonetheless. But Mark, I know you guys, the oil guys in America, don't like to give the Democrats much credit for much. But Mark, your thoughts on the same thesis, because I think it's important to indicate where we could go from here. Because as Mark said, going into an election year, one thing that Biden will be very focused on, and has, again, if he gets credit because he's the president, that seems to be the normal course of events. Gasoline prices at the pump are nicely downward sliding all the last few months, and that will be a big priority going into the new year. Do you take up the thesis I've just put forward, your thoughts on it and where it could go going forward to counter OPEC plus moves?
I don't think
blind eye to Iran, blind eye to Russian sanctions.
Yes, indeed. Yeah,
blind eye.
All these policies, which basically would be the opposite under any Republican government, in effect. So, the election year is obviously very, very important. And the swingometer. I think in terms of Iran, because I'm going to pick Iran out first, if we put that back into the context of the Israel-Hamas war, Iran is on a leash from China. This is a fact. People have not watched actually what China has done in the background because we live in the West, and the West assumes that it's the US and the EU which will dominate in terms of what happens with Iran. Unfortunately, it's not. It's the China and the global South, and Iran is in that fold, and it's being effectively protected. And because it is being protected, it is actually being less belligerent. That's from my perspective. Normally you would have expected within the context of the Israel-Hamas war for Iran to be getting a lot more vitriolic and getting much more involved at the moment. So, the Biden administration actually hasn't had much influence on that. It's a perception from our side because we only look at it from a Western point of view.
There is an armada of U.S. Navy just out my window here who could be policing those the Iranian sanctions quite much more than it is. I mean, they're clearly not. They're talking a little bit, but doing nothing.
Yes, yeah. So the Venezuela thing, obviously, we have to look at it in context. Yes, Maduro has been forced; his hand's been forced, but also the US basically loves that Venezuelan oil, and when. It's also testament to the fact, effectively, what Brian was saying earlier about US output actually, not being as impressive when one thinks about how much is dropping off from the fact that, the US refiners like Venezuelan oil because it's the easiest oil to stick into their refineries.
Well, they built their refineries for Venezuela being down the street.
Absolutely. So. They need it. So I think the election year is important, but I think it's more other forces which are at work, and the supply that we look at prospectively, because so much has been cut at the moment, output has been cut, is not necessarily so good, such a good picture in the long run. And if we actually get into a situation where we actually find that supply isn't so strong, then those issues are going to come forward. And, for the time being, for the US electorate, they're going to be looking at where oil prices are at the moment, or rather gasoline prices are at the moment, and they're actually going to be a lot happier. We only have to look at the Michigan sentiment 1-year inflation expectations last Friday to see them collapsing. It wasn't a general feeling of prices coming or inflation coming down. It's about gasoline prices.
Peter, you mentioned in your opening comments what nearly seems like sweet nostalgia now, talking about interest rate cuts, the innocent world of many weeks, even only months ago, where interest rates seem to dominate. Are they still relevant, Peter? They're with a big bumper US jobs number on Friday.
Yeah.
Any other month, you'd say up those rates. Your thoughts on the relevance as we get to the sort of the frothy end of this tightening cycle?
Well, exactly, Sean. And, you know, everyone was tipping possibly a 150, maybe even, you know, it could have been a 130,000 handle, and it came in just shy of 200 at 199 odd thousand. So where does Fed Chair Powell play with this? He's got relatively, well, very, very strong unemployment numbers. You've got the CPI that'll be released this week, you know, running at around about 3.1, down from 3.2. So is it baked in you're going to see 5 rate cuts next year? Is it baked in that, you know, you're going to see 25% pulled back in April or May? This is where the great dilemma is. You know, no one's really sure, and the market's priced it in. So we've been
down that road before, haven't we? We've been down that road before, where the market priced in rate cuts far too early on some. Yes. I don't know what they're smoking, but ultimately, you know, the U.S. economy would have to literally collapse to warrant the amount of interest rate cuts they're talking about.
Well, exactly right. And when you're looking at from a trading perspective, what's going to happen to US dollar if you don't see it? Because that'd underpin dollar, that'll crush a lot of these other commodities and currencies. So this is where traders are looking at in so many different lenses. If it doesn't happen, then what happens to US dollar? Pretty much it's going to be a move to the upside. What happens as far as US equities? And if that means probably you're off to the races with the US equities, if you don't see those rate cuts, or pardon me, if you do see the rate cuts, you'd be off to the races. And if you don't see the rate cuts, what happens as far as a handbrake to equities and all the other components that make up the economic cycle?
Brian, I wanted to, not to use a pun, but I'll use it nonetheless, drill into your forecast for declining US production. I mean, I think the surprise of the year ultimately is the US production reaching such high levels above 13. I think 13.2 or thereabouts is the high number. Your argument being sort of declining rig counts and so on, but ultimately isn't the reality, the story of 2023 that with the technology and the skill sets of the operators, that you can pull a lot more oil out of these rigs? You don't need, you know, useless rigs that are pulling a few barrels out of the peripheral side of the shale patch, but it's actually the extra barrels that are coming from the main rigs and the efficiency of those. Your thoughts on that and where you see the decline coming from?
Yep. I'll answer the last one first. Most of the decline is going to come from the Permian. There's talk that they may be moving from a tier 1 acreage to a tier 2, which means it's going to have a little bit more gas and less oil. So I think we're going to see a little less oil growth there. The efficiencies, if you compare 2019, so pre-COVID, and today we've had a 14% efficiency gain on the amount of oil coming out of a rig. So the thing is that having a rig to work in 2019 versus today, you have 14% more of an efficiency. Now, they're drilling longer laterals, which actually means they're drilling more of the resources coming up. So that means that there's a little less inventory, and that feeds the cycle of moving from tier 1 to tier 2. But another point that I want to make is, as you said, that has kind of led the story, is we're over 13 million barrels a day. Most of the year, the U.S. supply was sitting around 12 to 12.2 million barrels a day. Then in August, started to jump up to 13.2 million barrels a day. But the EIA actually changed how they report the barrels on production in that timeline, and you can actually take a look and put it into a filter and basically distilled down the front part of the year. We weren't quite as low as 12 to 12.2, and we're currently not quite as high as 13 or 13.2. The differences were a lot closer together, so I'd probably estimate that our current production is probably closer to 12.8, which includes a lot of NGLs. And this is before, with all the rig drops that we've had, the declines are going to start to catch up in the first quarter, because the fourth quarter they're trying to bring on everything they can for earnings.
Right. Let's get the survey question in. My producer's just reminding me here, which is oil fell last week for the 7th straight week, the longest streak of weekly decline since 18. Will that trend be broken before the end of the year? We're kind of running out of weeks to break it, but will it be broken? Let's see. What would do it? I suppose. I suppose you get to a low point, and eventually it has to stop. But Mark, I wanted to get your thoughts on a day today, which is I believe, the first day in office of Donald Tusk as Prime Minister of Poland. And the reason I bring that up is because I think Donald Tusk could be the hero or the leader that Europe is looking for. He was a fairly formidable leader of the European Commission. He is now Prime Minister. Your thoughts on his arrival on the main stage of European leaders at this particular moment in a country bordering Ukraine, at a time in which the Ukraine narrative is starting to, let's just say, weaken from support of the West, all of those pieces together. Your thoughts?
Yes, I think actually he will be a positive influence. He's a much stronger leader than particularly domestic Polish politics. You know, one has to remember he won the election because the government lost it, because they were appalling. But I think, you know, in an EU which really is almost rudderless, apart from Monsieur Macron, and his personality grates on so many others, the rest really are so spineless. That there is a unifying force needed, and Donald Tusk, certainly with the experience that he's got, can be that. Nevertheless, the divisions within the EU over things like budget reform, over the energy transition, even over aid for Ukraine. I think the aid for Ukraine part may be the part which he can lead on most strongly, because there has been a lot of bickering about it, and with Hungary effectively becoming more and more isolated, particularly with this change of government in Poland, he can do a lot for that. So I think actually he's going to be a positive for Europe, particularly at a time when so much else around Europe, particularly the EU, is not looking so wonderful.
Peter, today is the last day of COP28. Tomorrow is ultimately the day in which the decision is supposedly announced. There's a lot of chatter going on and about whether it's phased down or phased out of fossil fuels will be included in the text. And interestingly, I wasn't quite aware, but one of the data points that came up during all this arguing in COP was that Australia is actually a bigger fossil fuel hydrocarbon producer apparently than most of us over here. But your thoughts on the outcome from COP28, whether it's phased down or phased out, does it matter? Could it have an impact on access to capital? Generally, your thoughts as a curtain raiser to that final decision tomorrow.
Well, Sean, there are so many components to this as far as perspectives, and there's different countries' views and different nations that have political parties that are aligned with these, with the rhetoric, and some that aren't. So that's, I think, not only a dilemma, but how that plays into the internal fabric as far as population, and then naturally moving up to the political side. And I think here the big picture is going to be, should Trump be elected, how long is this going to be a success for in 24? And is it going to change the fabric of the whole argument, because we understand his views as far as drill, baby, drill? So I think, to my point, I'm sitting here going, maybe it's going to be a little bit softer than what we thought that it could have been, going back, putting your mind back 3 months ago.
China has come out and says fossil fuels deal's not perfect, but a key to COP28 success. So it seems the Chinese have accepted that the words fossil fuels will be included in the document. Would that impact much of the rest of Asia?
Well, I think it would. But remember, China's got a different viewpoint as far as, how it, from an electricity demand and from coal and coal-fired power plants and all of that. So I think, yes, China, they'll come under the umbrella of, China's views, Sean. I don't think that'll wash pretty much across the likes of Indonesia and moving up to the Philippines and so on. So, yeah, I think just watch this space and see how it unravels.
Let's give the last word to Brian and the somewhat tricky question ultimately, and the survey result. Yeah, the trend will break before the end of the year. Brian, I just want to get your thoughts. From a distance, it's hard to get a real sense of it, but sitting in Colorado, is the Israeli war in Gaza resonating in the political landscape there for Biden? Is it something he has to get in control of, or is there a consensus across the political spectrum to let Israel essentially run its own course as it wishes to do so? Where does it fall, or can you give us any kind of reading of how big a political issue it is going into the sort of hot months of the US election cycle?
Well, it's actually a lightning rod of an issue, because there's support for Palestine, there's support for Gaza, there's support for Israel. Historically, U.S. politics has aligned as an ally with Israel. This is getting increasingly complex. There's actually been this past week there was congressional hearings, and one of the university presidents was ousted because she answered a question about, well, would you say this about Israel? And she said, it depends on the context. And I thought that's actually a very fair way to answer a question. And so it's becoming a lightning rod of an issue, and it's probably going to be a lightning rod of an issue during the 2024 election. So I think it's a very complicated issue for U.S. politics, and it will be a headline and probably in the forefront as long as that conflict is going on.
Yeah, hopefully not much longer, but it has a big lightning rod in US politics. We'll have to leave it there. As we started, Brent crude oil trading up a little bit this morning, supposedly on US buying some cheap oil for its strategic petroleum reserve, which of course it has long said it wanted to refill once WTI is around $70, and that's kind of there right now. So maybe this is the window. Brian Pieri in Colorado, thank you so much. Peter McGuire going back to the beach in Sydney, and Mark Oswald in the London, not going to the beach, putting on his woolly jumper with all those nice colored Christmas trees on it. Listen, happy holidays to you all. Thank you so much for your contribution. We hope we will have you all at the table on January 10th for the World Global Energy Outlook Day, where we go around the world in 12 hours. Have a great festive season, guys. Thank you so much.
Merry
Thanks
Christmas.
so much.
Thank you.
Merry
Christmas.
Christmas.
Bye-bye.
Bye.
Bye.